Alrighty, folks, one rental at a time is a different channel because it is just not me. It is a collection of experts with experience across the real estate investing and lending market. And today we have Dustin from Convoy Home Loans. How you doing, man?
Good. How you doing, Mike?
I'm doing well. So I got just a bunch of questions I want to ask you as we do kind of a catch-all video to see what's going on this month. And I'm going to start with rates. It looks like the 10-year has caught a bid. Obviously today, it's actually off a little bit today, but over the last 10 days or so, rates are up. Mortgage rates are up. We saw it tick down, I think, as low as 6.17. I think the last reading was like 6.65, something like that. And, rates are up half a point in the last 10 days. So what do you think that all means? What do you think's going on? What's going on with rates?
Yeah, I mean it's no secret that obviously what's driving rates right now, at least, is whether the market believes the Feds are going to go higher than expected or lower than expected. I think 2 weeks ago we thought the benchmark might be four and a quarter. Now the market's kind of thinking 4.75, maybe even by the end of the year. I mean, it's also nothing new that the rates right now are very volatile, right?
Yeah.
Down 0.5%, up 0.5% in 10 days is not in a normal environment. So
Not normal.
we're just kind of used to it. This is just the choppy waters that we're in.
Yeah, so I think this is my current stance, and thankfully it hasn't changed in 6 months. I think we get a quarter point on May 3rd, and then I think the Fed's done. I know there are people like James Bullard saying, hey, we've got to go to 5.5. But dude, it's not coming. I'm hearing the lending market's drying up. There's like $105 billion in less lending in 2 weeks
Yeah.
from the regional and commercial banks. That stuff ripples through the economy, right?
Yeah. And it takes a while. And it brings up the fact, with them, is it May 3rd or May 3rd, I think, right? Next or two.
Yes. Second and third. It's a 2-day meeting, but the third's the decision.
Correct. And it's going to be a little bit interesting, but also I don't want to put too much into it because of the fact that it's going to be, the Fed's making decisions pre-crisis, right? We're not going to see
Exactly.
exactly like the
I'm
true
so
effect.
glad you brought that up because I've actually telling people that May 3rd's a horrible date. We will get
Early.
so little economic data. It'll
Yeah,
all be pre-crisis.
exactly. So what
Yeah.
what's the what are we really going to
What
get
are
out
we
of it?
doing here, guys? What are we doing?
They should have called for an emergency pushback so they can actually give us some real data.
Yeah, Jerome Powell's sick. We can't meet. We're gonna push it back to the 10th or the 17th. But yeah, it's a horrible date. And again, I think we get the quarter. I think it's over. And I think that's when it gets interesting in mortgage because what I think the lending industry has been waiting for a year now is when do we get to the terminal rate?
Yeah.
So if Jerome Powell comes out on May 3rd and says, hey, here's our final quarter, even hints at a pause, like, hey, we're going to take a breath and see what's going on. We got to get that margin, man. The margin between the 10-year and the 30-year is gigantic.
Yeah.
What the heck?
I mean, in terms of like where so one thing I want to say, because I like to think that you're right most of the times. Okay. I,
Okay.
I think we will obviously get a quarter point in May, but I still think there's going to be one more raise before the end of the year before
Okay.
we can pause. I think it's clear that, and part of it is because the Feds obviously look at core
Yep.
more than headline.
Yep.
Inflation came out better than
Hot.
expected on headline,
Yeah.
core not. And that's
Exactly.
very important for the consumer to understand that core is what the Feds look at. Now, they're kind of talking out of both ends right now, so we don't really know if that's going to happen. But I just think we still have two more left. I'm fine
Okay.
being wrong if I am.
Yeah. Yeah.
But I want to get that margin down. I just want to have not choppy waters, but just some calmer, maybe a 2 or 3 foot, little ocean breaks for those
Yeah.
surfers out there that we can kind of navigate through and have a more, I've said it, less volatile end of the year.
Yeah, where do you come down on this? Because again, there was a time where the market was calling for 3 rate cuts this year. Now they're taking at least 2 of those away, I think. Do you see any rate cuts this year? Kind of
Not to
your broken? No. Yeah, me neither. They
be wrong.
can't.
They can
Yeah,
pause it. They have to pause it, right?
they have to pause it.
But
Yeah.
but to go from raising to then cutting, it's just kind of there's not enough time in the year. Now, 2024 is going to come here sooner than expected, as it always is with time. But yeah, I
Yeah.
don't think this year.
Yeah. So again, I think if mortgage rates, well, let's call it 6.6, the 10 years at, I don't know, what is the 10 year at? I can just pull it up on my phone. Is it 4? What is it? 10 year?
Five.
Take
I
a look.
saw it at 3.55, I think, this morning when I woke up.
Oh yeah,
It might
3.52. So 3.52 down 7 basis points. So let's call it 3.5 for easier math. So 3.5, that's 300 basis points, more than 300 basis points. And if the average is 180 historically,
yeah.
there's a point of margin compression
Yep.
in mortgage rates. So we could be in the fives by the end of the year.
I mean, I wouldn't be surprised. Not at all. We've touched it. We've danced around it just in the last couple months. But every time that we've seen, there's been a lot of unexpected, like the banking crisis, right? Most recently, that have caused rates to not tank, but drop a lot more than anybody would have ever expected. But the overall trend still that the Feds are putting us on and where our economy's headed, the dreaded, R word, a recession, I think that's obviously imminent if we're not already in it. We're going to say we're in it now, or
Yeah.
quarter 2 or quarter 3. So I just it's been fun. Don't get me wrong, in a weird way to say, because of how much back and forth there is between us, other brokers, other lenders, and clients to kind of say who's right, who's wrong, who's actually doing the right thing. So it's
Yeah.
been a lot more, I guess the better brokers, the better lenders, the more professional, experienced people that know what they're doing kind of shine, and that's where I think it's kind of benefited us.
Oh yeah, the good operators are going to win. The fly by nights who are playing on momentum, they're going to go bye bye. Just
Yeah.
very clear. Another thing I wanted to ask you about, just kind of total random, and if you don't have an opinion, it's totally fine. But I don't know if you saw that Apple came out and said, "Hey, we're going to have a savings account,
No,
FDIC insured via Goldman Sachs, paying 4.15." My thought is another shot across the bow on regional banks, another flight. Money's moving around, but maybe it's a nothing burger. I don't know. Do you have any thoughts on all that?
I think it was like wild. Right now, I'm not a financial advisor. I'm not,
No.
in that
Yeah.
that sector, so I can't comment on any of that. But I follow the news, right? I'm in the financial services industry. To have, I can't remember the last time someone or another company did this, but arguably the biggest company in the world, right? Come out and, what is it, 400x the amount that you're getting from
That's 4,000.
JP,
4,000. 4,000x.
because it's point,
Oh,
I think it's 0.05%, right?
yeah,
Or
point oh
point
one, 0.05, whatever. Yeah.
exactly. So to go from 0.05, 0.01 to 4%, that's
It's
like,
wild.
yeah. And I don't know, have we gotten numbers? Like, how much money do you think has moved in terms of in the
That's
last,
the
what, 3 days?
Yeah, that's a big question because I had a lot of
I'm
passionate
really,
responses. So a lot of people are like, "This is a nothing burger. My bank pays more." Blah blah blah. Other people were like, "Don't you get it? Apple's evil. They're a big tracking device. You're an idiot. You're a moron." Right. So there were those responses. Then you have Bankrate that says the moment Apple released 4.15, they were paying the 13th highest interest rate on savings accounts.
yeah.
More importantly, there are 4,000x JP Morgan, Wells Fargo, Bank of America, Citigroup. And oh, by the way, the regional banks are already being crushed.
Exactly.
And I'm like, it doesn't matter that this isn't earth shattering. They will get billions of dollars, and those billions will come from somewhere.
Yeah. And I think the big thing is that obviously Apple, depending, what generation you were born in, right, is almost like a cult following, right?
Oh, it
And,
is.
and they have the brand, but they also have the trust of the consumer. So if you told me, you know, this regional bank 100 miles from me is offering 5, never heard of them. They want me to give me
Not
all their
going.
fun. I ain't going.
I ain't
Apple,
going.
Apple knows me probably better
Yeah.
than I know myself, right?
Yeah,
Realistically,
exactly.
crazy
Yeah.
to say that, but they
Yeah. Yeah.
probably
Yeah.
do. So to
Yeah.
trust them with, like, and it's backed by Goldman, right?
Yeah, it is
Um,
back. FDIC insured up to 250.
yeah, like, come on, like, I don't know.
Yeah.
I think it's, I don't know when they're going to release the numbers, but I'm very intrigued to see.
Oh, yeah.
It's a trillion,
I don't know if so
couple
this was
hundred
my
billion.
guess. If they get 50 billion in the first 30 days, it will be game changing.
Hmm.
Because again, the 50 billion is not being created. It's moving from somewhere. And it's moving from an institution likely that has fractional reserve lending. So again, they're going to be deposit constrained. I actually think it won't be so much the regional banks, it will be the big four.
Oh yeah.
Because again, why am I going to get 0.01 or 0.05 from JP Morgan? Right? JP Morgan or Apple. Well, they're about the same to me if they're both FDIC insured. I think
Exactly.
4% is bigger than this. So I'm going to go move 250 grand from JP Morgan to Apple. I mean, it makes logical sense to me, even though there was so much hate on that video. Oh my God, there was so much hate.
Yeah, and I think you brought up a very good point. It's not like it's, like some regional bank that's trying to earn business and, just drop a 5, 6% earnings
Yeah,
for a year savings. It's Apple, right? They're just as big as they have more trust, I would argue,
for
amongst the
sure.
average consumer, right,
Yeah,
than JP Morgan or Chase at this point. So does this make the big four increase savings to
it has to, right? It has to.
100%? Like they
Yeah.
can't just sit sideline and lose, all of that money. Now, sure, they got a lot in the last month from all the regional banks fighting over to the big banks, but I think they have to do something. And then I'm going to throw another just kind of curveball, maybe, but it's not going to surprise me if in the next, I think a year is too early, but 2 years, 3 years, 5, 10. And I think it was like a year ago, Amazon, there was like some news that you could get a mortgage through Amazon, right? Like they have enough money if they start collecting
Yeah.
4% and moving a lot of, average Americans' money, that they're going to be in the ability to lend on
Yeah.
mortgages. And then who knows what happens there.
Wow, this is wild to think about. Again, uh, at the end of the day, I think what we have after this Fed rate increase is a general slowdown in bond movements. I mean, these crazy moves in a week, 2 weeks are wild. Hopefully that settles down. Hopefully they fall. I think we got to track this Apple news. Again, if they get 50 billion in 30 days, it's game changing.
Yeah.
It's because the money comes from somewhere, and it will force the big four to raise rates. I think. Will they go to 4%? Absolutely not. But they'll come off the point oh 0.01. That
What
that's
it wants
that's
to
for
let
darn going to show.
go. You're losing
It's
money. You're literally losing money.
crazy. It's crazy. Well, do me a favor. Somebody wanted to reach out to Convoy and see if you can help them. How would they do that?
Yeah, go to our website, convoyhomeloans.com, and just mention you came from ORAT. That way John and myself can help you guys out.
Yep, that's the deal I have with them. They come back every week, and if one of you reach out, they help you. That was the deal we made at the very beginning. So, Dustin, thank you very much.
Thanks, Mike.